All right, good evening, everybody. Good to see some of you joining on. Just wait a couple minutes, couple seconds, see who else we can see filter in, as usual. And while we're waiting, everybody hearing me okay? Too loud, too quiet? One more second. All right. I assume I'm being heard good. Let me go ahead and get started. Guys, welcome to the Hurley Investments Trade Findings and Adjustments of April 14th. My name is Keith Bybee. Thank you guys for joining me this evening again. Today, I just wanted to start by going over a little bit of charting and just kind of going from there. You kind of see my outline here and the direction I'll be heading as we move along. But I did want to just kind of go over a few charts and check some things out. S&P all the way back up to a 50-day. If I can draw a couple things here. We've got a number of technical crossovers. And I don't know why I'm getting brown. That's kind of crappy. Let's do red. So we've got, and I just realized I circled the bearish crossover, and the rest of these, of course, are bullish. We have a 200 and a 50-day crossover. If we do get our V-shaped pattern, that might look a little more like this. We head up this way. But that's not as important. I did want to show shorter term. Here's our crossover on the RSI, our crossover here on our 5 and 20 exponential moving day average. Of course, this guy down here as well. So those are our bullish indicators to the short term. Obviously, we're looking at 50 and 200 on the other chart, which is, of course, a longer term trend. But suffice it to say, for this period of time, we are following a bullish near-term trend. In our markets, Apple, big move today on Apple as the iPhone sales jumped up in China for March numbers. They had 2.5 million versus the 500,000 or so in February. That was of course very low thanks to the virus out there. But that big jump in numbers has boosted Apple all the way back to above 280, which is where they passed last December. So they're one of the quicker recovering, at least in share price, stocks. Going over to the near term, as you can see, we also have our crossovers. And my terrible drawing here, I was trying to circle crossovers. You might have remembered yesterday, Kevin talked a little bit about a W-shaped recovery. And I think he showed the chart for Eli Lilly. If you've looked at a few other charts, you kind of notice similar things. Not so much on Boeing, but I did want to show that they haven't quite turned bullish. I'm pretty sure they're quite a ways away from the 50-day, and they've crossed over long ago to the bearish side. Boeing after hours, just as a note, is up like 2.5%. It was up a little more. And slowly been kind of coming back. Bank of America, they were finished that thought with Boeing. Well, we'll come back to some of the fundamentals on Boeing. Bank of America, another one that you could argue a bit of a W pattern. Not quite up to their 50-day. And with the moves today, they are bullish. See here, at least a short-term bullish trend. Let's see, Disney, bullish crossovers again, all across the board. Just wanted to check out JP Morgan. They had their earnings and they, of course, missed quite a bit of their numbers, which was to be expected. Everybody is going to miss some numbers, and nobody really wants to give great guidance because, geez, what are they supposed to do? So they still are bullish even with the movement today coming back from missing earnings. Of course, as some of these companies come out more, again, to reiterate what Kevin has mentioned, is we'll see how the market reacts to an earnings season, whether it's ignored or, I guess, which parts matter most to the market. But again, you see somewhat of a W. Now maybe you could argue this is doesn't quite make it, as it doesn't get all the way back down. And that's probably true. But just going with my just kind of gathering a couple of notes here. So JP Morgan, I did Disney, wanted to do Ford. Now Ford almost fits it the best out of those ones I've seen, of course. Kind of more like that. Not quite back down to 4, but pretty darn close. And they're actually very close to becoming bullish. Man, Ford looks a lot like Boeing. All right. So those are a couple of notes. So you heard Kevin talk yesterday about could it be a V recovery? Could it be a W recovery again? Right now, obviously, it's looking like that sort of shape. We need to continue to head up. Past this point is pretty important. So for the first question of the night, what do you guys think will make a V-shaped recovery, or at least to continue on with what looks like now a V-shaped recovery? What has to happen? Type in a guess, a thought. Still waiting for you guys. What is going to make us a V-shaped recovery? What has to happen to make this market sell-off and recovery look like a V? Come on, guys, help me out. Not necessarily fishing for anything, but give me some thoughts. All right. So here's one thought. Continuing to plateau. On Corona, I'll just say cases in the US. Well, I'll just say cases because after all, it is a worldwide problem. And last chance, guys, type in something for me. This is going to be a little more interactive. What else? What continues to push things higher? Okay, I got a cure, a vaccine. Okay. thanks for the comment. That is going to be, I do think that's at least the news of how that is coming along with some of the pharmacy companies working on those is going to be a boost for sure. But that is still a year out before we get our first before we get our vaccines out and going. So that's not even something that is going to be available until 2021, at which point we'll have a virus that may have mutated and, you know, have to start a different process. But yes, Maud, thank you. But I would think before we get a vaccine, it's news that that is progressing quickly, and that has, I think, already helped a little bit. Restarting the economy, yes. And I would say that is an even more relevant answer. And I'm going to say economy coming back online. And even news of it coming back online. We have that discussion already happening with the president and with states. I've saw, let's see, just looking through some headlines here. Thought I saw one for California recently in talks to see what the next plan is. I thought I saw, I did see Trump wanting to get things back going on the 1st of May or in May sometime. So yes, those things, great answers. Those are going to push things higher. So what, in that case, what causes a W-shaped recovery? Where even if some things come back online and maybe we head up a little bit for a few weeks, who knows, and we struggle to retest some lows. So the question is, what puts things, or what could reverse the prospect of this going up more versus what happens, what might make it struggle and possibly retest some lows? Maud, you're making my night much easier. Thank you for the comments. More bad news before good news. Yes, I agree. So what, if you can elaborate maybe on that, what kind of things has the market been sensitive to? And you other guys are welcome to chip in here. Let's see, more cases, higher death rates, not restarting the economy, delays. Great answers. So more cases, more death, higher death rates. Just as a comment on those. Yeah, so if we get anything that is any sort of a surprise, or we try to start the economy going up again, and then we get, you know, more cases ramping up because now we're back to work. Yeah, I would assume that would happen later in May or in the summer if that were to happen. But the market also is kind of expecting deaths to go up as they kind of follow the cases. The cases ramped up and deaths have followed in a lagging manner, and so I think there's more focus on new cases. So what has pushed things up until now is those new cases the last week or two have started to plateau. And it's kind of funny because we went over a lot of that. I did, what, on the 31st was my last little webinar, and we went through a bunch of those, a bunch of the states, and I heard a bunch of people calling it pretty early that we'd plateaued, and we went up for another, you know, week before that was the case. So let's see. So I still think there's some more comments we can have. Let me write in these ones. And Maud, I'm going to say for more cases, I'm going to say cases not truly plateauing. Not restarting the economy, or I would say restarting the economy keeps getting pushed back. Now there is one I'm kind of fishing for, and it is a little bit more near term. What have we got coming up this quarter and starting this week? Bingo. Earnings. Thanks again, Maud. 10 points for you. Sorry, you other guys on here are, you might be losing points. I'm sorry. Maud is killing it. So our reaction to the earnings, and so it could be kind of a mix. We have cases plateauing as long as we continue to plateau, as long as we continue to have talk and plans for the work to get back going. This quarter might be a quarter for people to, investors to somewhat ignore the earnings reports, because we're really not going to know how well these companies are able to weather some of the issues, what companies are going to do okay, which ones are were struggling before and are just dead in the water now. So maybe it's possible or more probable that next earnings season or the one after might be more important. So I'll say maybe even third and fourth quarter. To see how companies weather the storm. All right, any other thoughts there? So I think those are our cases for each. And you could also say, if we went back to our V recovery, less than awful earnings. So some companies not doing so bad, or at least giving optimistic guidance. Going back to JP Morgan, they said they didn't see the economy coming more back online until later in the summer, June, July. I think that is more because they want to under promise and over deliver, and set expectations low so that things are easier to exceed. Usually the smarter CEOs tend to do that. It's the Bob Iger saying, I'm not going to promise Disney is going to come out with, we're not going to upgrade our forecast for Disney Plus subscribers. And ironically, speaking of Disney, 50 million subscribers. It just, we just learned. And kind of the real first day that Disney's been able to hold a 105. Obviously, it's just one day, but we have higher highs, higher lows. So that is a nice thing to see. All right, so to get to some trading and thoughts, I kind of want to pick on spread trading a little bit. I want to know, those of you who have done some spread trades since the beginning of this year, and I want to know if you've had some work out, or if most of them or all of them have been total crap. And I'll even be nice, and I'll keep you anonymous. How have your spread trades gone this year? Bull calls, bear puts, bear calls, bull puts. Any takers? Well, I haven't done, I guess instead of the, other than a GE, which Kevin has gone over, which right now looks crap. But that one is also a leap bull call on GE, and tons of time for that to come back up, and we've dollar cost averaged it. You can go back and see that. But other than that, really, I'd have to go back to Activision back in the fall. Okay, I've got some answers. Sold naked puts on stocks due to the high volatility. Been able to be far out of the money, and most have worked well. I had to roll 2. Well, good. Glad most of those have worked good. Another answer. Believe it or not, I have done well on some calendar trades. Good. So some calendar trades. And some naked bull puts. Far out of money. Oops. Don't know why I capitalized that way. All right, I'll be honest, and please don't take offense. I like the calendar trades a little better, excuse me, a lot better than the naked bull puts, as I feel your risk to reward would have been better than selling short puts, but I am glad that you were successful on that. Let's see. I think that's all my comments. Good, guys. Glad those have gone well. Now, any that went awful. Because if you haven't had any and you've tried to do some spreads, you are the exception. And I hope that's the case, because that's a great thing. A lot of people have done awful on spread trades this year for obvious reasons. Difficult to pick a direction, huge volatility. So I am glad you were able to profit from the volatility, and that you were able to do some calendar trades that allowed you to be profitable from volatility crush. So well done. What have I suggested? Kevin and I have both been pretty consistent in going out for plenty of time. We mentioned the SPY, just doing the index, doing the 20 to 25% down and adding as things drop, buying on some dips to go out for over a year if you're doing calls, obviously, or if you're just buying the shares. Same deal. Now, I'm still going to kind of double down here. And let me erase this because that's different. Leaps are still your best friend. Especially now, since volatility has come down a bit. And I guess I haven't been completely honest. Some spreads, well, not out and out spreads. Any of the spreads we've done on things like bear puts and that type of thing has come because of how we've managed stock positions. Obviously, paying ridiculous amounts for protection, we needed to bring in some credit and do bear puts to lessen our costs there. So, but all that has done, obviously, has lessened some cost and did give us some opportunity to book some profits as, you know, we had some of these days. These days, we book profits. Okay. So I'm still going to double down. Leaps are your friend. It gives you the time you need to. I have had great wins on spreads throughout the years, but for the bulk of anything great that's happened for my investing, it has been leaps as you get a larger portion of a trend. You can dollar cost average. You can even turn it into a bull call and cap some of the upside to get called away. There's lots you can do there. So this brings me into the next part and why, again, leap long calls. I got a couple of new folks here that I'll try and make this a little easier for, so bear with me, those of you who are not new. So call contracts, call option, go out a year or more to expiration. Think of it as stock replacement. And you're a little easier to understand. Okay. So headlines. A lot of movements on headlines. And it goes back to going through all of these positions, all of our stocks that you know that we invest in and we have and we manage. None of those are any secrets. We're pretty open with all of that. So let's talk about Boeing for a second. Why the heck Boeing? Today we had, what was it? 114 or so new cancellations on the 737 MAX, which was the big reason why Boeing was falling down a little bit today. Which makes it a total of something like, let me just put this in. for the year, like 300 some odd. So if you were just looking at that headline, 100 new cancellations, that doubles pretty much what they already had. Some of those went over to Dreamliners, like 40 something, airlines switched their order to the Dreamliners, which they have better margins on. But let's just go over this. So 300 out of what? Again, if you just look at the headlines, if you're just trading on the headlines, that doesn't tell you the whole story. And it goes back to, why are we investing in stocks in the first place? What's the point? What are we looking at? Is it to make a quick buck? Again, we look at companies, we look at stocks as companies. There's how they perform in the stock market in shares, share prices, and then there's what the fundamentals are of the company. If you know the fundamentals, if you know the actual numbers of their margins, their debt, what kind of debt, why they have it, their revenue, if you understand those things, then you can see through a lot of the bullcrap. What's the big problem with the stock market? It's liquid. People can buy and sell and do all sorts of crazy crap, but that also gives us the opportunity. If that wasn't the case, we wouldn't have undervalued companies. We wouldn't have overvalued companies. Making money. Thanks, Maud. Yes. Yeah, of course. The point is to make some money. I don't know of another vehicle that has generated more wealth for the regular guy and the rich guy and gal and the little guy and gal than the stock market. All right, so I'm kind of rambling on. I apologize. Let me just go over a couple of numbers, and then we'll go over what makes a smart investor. And I kind of already alluded to it. 300, right? 300 cancellation. Out of what? Does anybody know how many orders Boeing has? I'll give you a hint. It's around 9 years worth. And if you cancel now, you go to the back of the line. I had a guess of 1,700. Try about 3 times that. Thank you for the guess. Just over 4,000. So about 7-ish, 7.5-ish% of the planes have canceled. A lot of those are from companies. And if you read that headline, yeah, wow is right. So if you read the headline, and you can look at, go on CNBC, and I'll just open it real quick. Why not? It was just one of the latest. Let's see. Canceling 150. Okay, so I guess it was more like 150, but I thought it was, they were netting back. Net cancellations 119, and 31 of those orders were moved to other planes. Okay, so why does this not matter? Why? What is the difference between a smart investor versus someone who just reacts on the news? Someone who's done their homework and has learned about these companies and learned about their numbers. Thank you, Maud. Reads the whole article. But let me just point a couple things out. Brazilian airline Gol canceled 34 of their new narrow-body planes. Avalon leasing firm. Have any of you guys heard of these airlines? Because I haven't. So I'm gonna make so let me arrive at a point about that. Got an answer. Brazilian one probably wouldn't have paid for them anyways. Good answer. So the ones that are totally canceling out, why would you think they're doing that? I would think it's because they're going bankrupt and they're trying to get everything back that they can to go through that process, because nobody that is going to be solvent is going to cancel those planes to be put in the back of the line. You got Boeing. We'll give 5 or so planes away to the big airlines as a thank you for being patient in this crappy little process. They can take a few billion and write that off, lower their tax in the process. Everybody wins. All right. So they've got about 4,000 of those are just the 737 MAX, and there's another 1,500 or so across the board of all of the other airplanes. So a lot of the ones that I've seen have canceled from anyone of note has moved portion of those orders off to the Dreamliners, which they have better margins for. And I'm going to say no name. All right. So it's not that 7.5% is a small number, but it is not a huge big deal. in the grand scheme of things, and their margins of around 50%, even if they come down a bit, are they are a matter of time before Boeing gets to be making a good chunk of change and off to the races as things go on. I did want to go over Ford as another example, but you've heard Kevin talk about that. I think he even talked about it last night. So suffice it to say, what makes a smart investor? And we've got obviously a couple answers. I'm going to say one who does their homework on the company, because again, there's a difference between the company and the stocks and shares. And knows how to properly weigh the news with actual numbers. All right, I hope I've made a point there. I know I haven't really given a trade, but we've had a Disney, a Visa suggestion that Kevin has gone with, leaps for. I think you're better off if you wanted to do those. Again, you have also the Ford, but if you wanted to do a Disney or Visa, we still have room to go. I would wait for Disney to see if they can continue to hold that 105. Visa is already kind of taken off a little bit more, but certainly not out of the question. Thanks, Maud. Thanks for your participation. Really appreciate it. Anyways, guys, you know the picks we've had. There's still some opportunity there. Again, I'd go for leaps out to a year because it gives you the best opportunity to weather a market with who knows if it's going to be a V or a W and L, which stocks are going to be a W, a V, a L, whatever the case is. That gives you the best situation and gives you the best going forward through a ridiculous year. All right, I think I've made my point. Any other thoughts or questions, guys? All right, if not, I really appreciate you joining me. Thanks for the entertainment, and I'll probably be joining you with Kevin's webinar Thursday morning. Take care, guys. Thanks a lot.